Good morning, everybody. Today is the 11th day in the month of January 2022. My name is Heritage Adisa, market analyst at HotForex, and as usual, we check through the markets, see what the overall story is, the overall sentiment is, if the opportunities, and then how we can take advantage of it. But please always remember that this is just a communication material. Nothing in this communication should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning, right, in terms of the overall market environment is a more mixed start to the day. We've seen across board, not really any tilt positive or negative. News flow, first of all, has been light. We've not really had, more fresh information. Yes, there's focus right now on Fed Chair Powell's speech and testimony later in the day. If we get any clues on monetary policies, there's that to watch out for. Apart from that, markets are also focused on inflation, CPI for the US, and that's on Wednesday, that's tomorrow, right? But apart from that, currently there has been no major new information flow into the market. Yesterday we had, a very turbulent day in market. So we had wide swings, right? And then catalyst was even still light there. And then today again, starting the day, we are having that overall, similar lack of catalyst, lack of drivers, lack of convictions to start the day. If you look at equities, for example, today's session, we are starting the day very flat, right? And remember, that's how we started the previous day as well as yesterday. Yes, a little tilt higher, but nothing too major. I remember saying yesterday that, yes, we had that blind or that slight tilt positive to start the day yesterday, but there was no catalyst. There was worries from Australia, and there was really no, convictions in what we had as at yesterday. I remember saying that it's one of those days where you want to be patient, pay attention to sentiment, and see if there are better opportunities as the day progresses. And it wasn't long, we had a switch, a change in sentiment, and we had that flush to the downside. Yes, catalyst on the back of this was even still light, but then we had that play out right for the day, right? So that's how that went for yesterday. But even with that, right, later towards the end of the day, towards the late American session as well, we had recovery from that. We had, another pullback, retracing most of those losses, and we had the day mostly flat, still riding on the back of nothing too tangible as well. Now, in today's session as well, we are starting flat, right? One thing about markets is I think patience is very key. I think as traders, it's one of the major things that we should one of the major virtues that we should hold and have, because it's not just about taking trades. I think more of the time, when you have or when you don't have anything tangible to latch onto, when you don't have strong convictions on anything major to hold on to, yes, there'll be major things, right? Long-term stories, big overall stories, long-term biases that you always want to latch onto. But if in the short term there is no trigger, no tangible catalyst right now, it's always better to just sit on the sidelines, because if you just jump in on the back of something low quality, if it turns out not a successful trade, it will kill your energy even going to the next one, right? So holding on with that, if you look at equities, first of all, I think one of the things I want to also point out is, right, yes, we are trading very close to the highs, but in recent time, we've had a push lower from the highs. Deep buyers, no doubt, that's what we had yesterday, coming yesterday at this round number around 4,600. Deep buyers have always or will always still be a major part of market, especially even in equity space coming from mid 2020, right? That's still in place. But with the US Federal Reserve expected to hike, first of all, markets are expecting about 4 hikes right now from the Federal Reserve. Inflation is getting sky high, right? Job numbers, job markets super solid, and all of these things points towards tighter policies, points towards tighter monetary conditions, which is not really good for equities. And then, yes, we have that in place. We could see further downside in there. And apart from that, we're already having, pullbacks, already due for pullbacks. Yes. But even with that, if you look across board, I mean, it's been just one-way traffic all through. So despite the fact that we have that, I mean, markets are still being very adamant. You can see the long week we had on this particular one, strong rejection around this level. And markets are still not latching on to, or still riding on the positive. Markets are riding on the positives, on the deep buying, global economic recovery. So there's that to still worry about, even at this level. So I'd like to see, something clearer. I'm still very much, a bull on this on equities, but I'll prefer deeper pullbacks. Before I look to come into this, yesterday's one was good. We pulled back to very close to that 45.50, previous highs going back to early September thereabout, right? That would have been an interesting one, but I didn't catch this unfortunately. I'll prefer to still see, maybe another test of this, maybe inflation out the way, retail sales out the way, something really better off before looking to latch onto anyone, in this particular front. But it's what we have is interesting. I'll pay attention to it, and then we'll keep looking at it. Across equity space as well, generally, we still have, that same story, that pullback in yesterday's session. Let me show you. Pullback, another recovery, more like a V-shaped losses and then recovery of losses. But in today's session, we're not really having it just yet. The markets are still waiting for further close, waiting for stronger direction, for looking to latch into anything new, anything new and short term, right? Like I said, for equities as well, the story remains the same. Deeper pullbacks like this one is really interesting, right? We've seen that strong rejection from yesterday. I like it, right? US 500, but I really want to get inflation out the way. I really want to get, retail sales out of the way as well before looking to latch into anything new. But upside on this, really on the back of just latching onto the buyers. I mean, it's an interesting way to look at it. And if you look at even this, let me see, I think we have something here. Okay, my system's okay, good. I think we're back. All right. Now, if you look at this, right, this is similarly not a bad way to look at it. I mean, if you want to just look at this key support trend line coming from early March thereabout. So that's also an interesting way to look at it. I mean, let me just finish with this. All right, now paying attention to this, you can see that every single time we came close to this, we bounced off it. And now we are there again, and we already clearly bounced off it as well. So for the upside here is still interesting. I mean, it's been like that for a while, right? If you look at the full story, I mean, it's been a one-way traffic. Yes, I'm very worried by it at the highs, but we're not even at the highs anymore, right? We've seen tangible or at least good enough pullbacks to a certain level. We're back above this key support level coming back from, 5th of December, like late December thereabout, right? A retest of this could be interesting, but like I said, I would be a little bit more, I'm just, very concerned about inflation because high inflation, super high inflation could see strength for the dollar, could see further downside for equity. So there's that to also watch out for and have at the back of the mind. For VIX, right? The VIX has seen this 20 level as, one of the, it's just been very, very close and very attractive to this 20 level, right? A key barometer as well. Being glued here, I'd like to see it keep lower from here. If it keeps lower from here, obviously that's good for equities. Right here, where we have this key support level here as well, I want to see how it plays out from here. Downside means less fear in markets, right? I'll prefer that to see or to strengthen further strengths in equities or the bias for further strength in equities. For bonds, right? In as much as we've seen downside for bonds for a while, pushing lower as well, with yields pushing higher on the back of high expectations for further and faster rate hikes. Right now, we are trading very close to this key support level, right? And this is so interesting because it's also telling on yields, with yields also failing to break out a new height. Yields are the interest rate on bonds, right? Now, with this particular one, I feel like we need to be very careful here because we could see pullbacks and retracements here, right? If we get any disappointment from the Federal Reserve, maybe dovish Fed Chair Powell talking about inflation still being transitory. I mean, anything in that sense, because in the real sense, it wouldn't seem like, it wouldn't sound like inflation has become, right? It's no more possible to have transitory inflation. No, not really. The ECB still believes it. Yes, we could look at the reasons why we're having high inflation. Supply constraints is a major one. Supply induced inflation is a major one. When that is sorted on the back of less restrictions, less COVID cases, that could really help push demand up, really help push supply even better as well. And that could really moderate inflation even going forward. So we are not really ruling out inflation being transitory. So, I mean, yes, it's a worry right now, but we can't say it is now a no-brainer that inflation is now a major problem that must happen. No, not really, right? It's a worry. It's something that markets are very concerned about, something that the Federal Reserve is very concerned about. But if we still get any form of slowdown or even overpricing or even repricing, really repositioning, all right, from overpricing in of faster rate hike, because 4 is actually a lot, right? If we could get that, we could see bond yields, for example, bonds itself, I mean, giving some upfront, pushing higher, equities pushing lower as well, could also give bonds further pushes to the upside as well. And that could also help yields lower, right? So I'm still very, very much patient around here. I think the year is just starting. We're still trying to fit into the teams just yet. So I'm being a little more patient, watching out and seeing how all of these things play out going forward. But it's one to be watchful for. This is a key support level I am very, very, very watchful on, and I'm going to be very careful around here. For the dollar index, it's still in this range. I think I'm still going to be very patient here. I want to see clearer biases, something stronger to latch onto. For now, right, being in this overall range closer to the lower boundary, I think it's one of those periods where you want to still be very, very patient on this one and wait to see something better. Maybe clues from Federal Reserve Chairman Chair Powell, or from CPI, PPI, even resources from the US data generally, that could help. But for now, I'm holding on the base, just being a little more patient with this particular one for the time being, right? For FX, in terms of strengths and weaknesses, we still have a mixed bag across board. Nothing really, really, really strong enough to hold on to. Cumulative strength and weaknesses, we're not up to even 1% on any of the major currencies. That strengthens or that highlights the range that we're trading in, even intraday. Nothing really major, swings here and there. And I don't want to really be caught in the middle of this rigmarole and this messy price action that we have currently. I still like strength in the dollar, no doubt, right? I like to see super good data, hawkish Federal Reserve, Powell, him coming out to say he's not going to allow inflation to disrupt markets. I really like to see that for strength in dollar, strength in yields, downside for Euro USD, strength in something like USD CAD, for example. I'll still like that. But for now, I'm taking a more prudent approach, a more patient approach, and then we'll see how sentiment plays out for the rest of the day. On the calendar, it's going to be another light one. Yes, we had Australian data, right? Mixed data as well, but good. We had super good retail sales monthly for the month of November. Yes, but even with that, AUD has not really done anything across board. So that just goes to explain, right, how much markets are looking for something tangible to latch onto. Later in the day, we're expecting ECB president on the wires, as well as Fed Chair Powell's testimony. But apart from that, there's not so much to latch onto. It's really, really a light one. I think from tomorrow, we'll start to have, retail sale, CPI rather for the US. I think we could get, something better to hold on to. So I'm going to leave it at that. Thank you very much. If you have any questions, as always, please do not hesitate to ask, and we'll always do our best to help. Thank you. Do enjoy the rest of the trading session. Goodbye for now.